Hey, good morning, everybody. This is Trade at ATS. My name's Rob, and I'm going to be working with Wade and Shane this morning here as we go start the program. And so before we get going, could somebody give me a sound check? Make sure you can hear me okay. Just type a Y in the box if you could for me. Takes a little bit of time here just to get an acknowledgement on that. Very good. Thank you, guys. Okay, hey, so this morning, happy Tuesday, everybody, for where it's still Tuesday. Anyway, as I said, my name is Rob, and for those that are new with us on the program, the webinar, you can expect we're going to go somewhere between an hour, hour and a half. It kind of depends on the questions that happen. And what I'd like to do before we get kick this off is give you a couple tips. One, if you would like to put in and get some sort of review of a trade or trading, get some explanation on what's going on with a certain currency pair, what we need you to do is go ahead and put in the chat box or question box, put in the currency pair that you want, give us the entry time frame, and also your directional bias. So a 5 into a 4 hour or however it is you're trading. And then as we go down through here, Wade and Shane will go back, look at your questions, and then try to incorporate all those into the program this morning. So one of the other things I wanted to mention is that if you are new, you've got a technical question about software or anything like that, want to make sure that we direct you back to support@tradeats.com, and they can help you with any kind of technical questions that you have. We try to keep this to reviewing currency pairs and kind of what's going on, as well as reviewing the volatility report. So make sure that you put those questions in ahead of time, because Wade will be scanning things while Shane's doing the volatility report. So again, put in your request for review of any currency pair. And with that, we're going to go ahead and get things kicked off here. And we're going to turn it over to Shane, and he's going to go over the current volatility report. Shane?
All right, thank you. There we go. Looks like everything's working well. All right, yeah, as I said, thank you everyone for being on. So we're gonna go ahead and kick off things with the volatility report. We're not gonna spend a whole lot of time on this one. For those of you that have seen it, it's a little sparse on some of the things that we can feature right now, though there were some pretty good options, mainly in franc yen and gold dollar. So one of the things that I wanted to bring up, kind of a continuation of what we were talking about last week, how we dove in a little bit more to the master pattern and how you guys can identify this. Just wanted to kind of bring something up. Let me go ahead and switch. This actually mainly applies to gold versus the dollar, so we'll go through this real quick. So on gold versus the dollar, we've been in a pretty large uptrend for a little while. So going back and just kind of looking at where things are and where we can kind of figure out where the origination point of the master pattern is, it seems to me that it would be, we've got 2 points. We've got this right here. This was kind of the initial one, broke out of a box, broke through the high, swung through the low, and then put a line right off of that. This is the daily chart, by the way. Then we can see some of the reactions right around this price level. So we had swing high, swing low, swing high, pushed up a little bit more again, and then the swing low, and then swing high from that point. Now, interestingly, up here, we have not technically gone through the same thing. So when we have a box, we form a box at a high like this. I really like to see price break, swing high, swing low, without forming a box to kind of consider that as the origination point. So in this case, we did do the swing high and then the swing low, but in between that, we formed a new contraction zone. We almost had criteria here, but of course we never broke through this high. So at this point, we're just still kind of in, it seems to me that we're still working off of this. So that being said, we'd want to just wait and see if we do end up breaking through that. Then of course this would be the new origination point of a master pattern, and we can kind of consider this as a range that it's formed outside of this. Then we'd be looking for the swing high, swing low, you know, starting to whip back and forth around here. Now, just to jump back over to Frank Yen, there's something similar that I wanted to bring up on that. This one's much more obvious. So let me go ahead and put a price line right here. So we have this box right here formed. We can see that this range is pretty similar. We had a big run up. I always like to see that where it detaches. You know, you can kind of find where it starts a new range all on its own. So we had this box form right here, swing high, swing low, and then you know, we can kind of see that it's starting to just do the whipsaw back and forth, and we just broke through the swing high point, and now we're coming right back down to that origination point off of the initial box. Anyways, just wanted to kind of bring that up. As far as actually trading this is going to be definitely a point to be aware of. You know, you're probably going to see quite a bit of reaction right around that level. So just kind of keep that in mind as, you know, as things are developing right here. And I also understand, I got a few people that mentioned that they did not have a box right here. This one was pretty close. We can see how small those candles were. So as far as forming a box this area, it's still not going to matter quite as much. You'll see, since we have the swing high and we broke through the high of the master pattern, if we can get down below this price level, it really wouldn't be surprising if we came back to this expansion and then, you know, kind of did our swing low at this level. So anyways, we'll go through, and if you have any questions on this, we'll go through and try and address them. But that being said, that's pretty much the volatility report. So thank you, everyone.
All right, Shane, thank you. Good morning, everyone, or good afternoon, good evening, wherever you're at. Wade here. Give me a second, guys. And in the meantime, I'm going to set my screen up. Can you guys just type in a Y, make sure you can hear me so I don't start rambling to myself. And I'm going to get my screen set up in the meantime. Thanks. Okay, thanks, guys. Appreciate it. Looks like we're good to go on that. I'm just trying to get my screen pulled up here. All right, so everything should be good to go. So anyway, I want to welcome you guys to this week's webinar. I appreciate you going through the volatility report, Shane. That gold trade, I'm going to go back. Shane wanted me to do a little bit more in depth on those two, just to do kind of a top-down analysis. So we'll start with Frank Yen real quick, and then I'm going to get into some of the pairs you guys were requesting, and then we'll go through some of those as well. Let's see here. Where's my Frank Yen? There it is. Okay. All right, so let's jump in. We'll work it down off the monthly and see what's going on here. Okay, so the daily is what triggered the volatility report, because right now, I mean, the most immediate thing, you know, in the overall master pattern swing, you see we got the swing low, swing high, swing low, down to this point again, and now we just broke the swing high point, which is back here. So it's all pointing back to this box right here as the sensitive price, and that expansion coming out through the middle of these expansion legs. So right now the question is, are we going to come out of this box and push into a new trend going long, or are we going to go back down to the swing low point, which is down here, which very well could happen. But right now is the volatility signal, the initial volatility signal is coming out of this box, and now we're interacting with this price. So I will tell you right now, pretty much there's a very high percentage chance that we are going to get movement on franc yen. I would say probably this week. This is probably a good pair to look at throughout the remainder of this week for looking for trending days, meaning days that have an opening and a closing price that are either higher or lower at the start and the end of the day. Those are trending days, not days that open and close at relatively the same level. So from this area right here, because we're dancing, we're playing with that expansion level. We've already broke the low. That's the volatility signal. We know that bigger players are starting to see that. People in general are starting to see that. It's like it's the first sign of activity that's coming into this market. So we're getting to see that right now on that breakout, and then now we're at the tipping point right now. It's like, is it going to break through and we're going to build long, or are we going to get a reaction and build short? And that's really what you want to be looking at if you're trading the daily into your as your directional bias. Let's say you're trading the 15 into the daily. That's what you'd be looking at. You'd be looking at that 15-minute or the 1-hour chart for clues telling you what the future of this candle is, because you will get a reaction from this level. I guarantee you it will not stay at this white level for very long. You're going to deviate low or high, and that is the decision point. So look at your lower time frames to figure that out, which we'll go over and look at that in a minute. But interesting thing here on the monthly is that the monthly has gone long right now. However, we got 14 days left on the monthly candle. So, and we have snapped this last high right here, and which is why we've gotten that pullback off of that as well. So, something just to keep in mind, with this is that we did break the high. We could retrace this candle. We could come back into the middle of the range, or it could even come back down, all the way down to the expansion or through it. But what you want to do, my suggestion, you guys could do whatever you want, is I would probably, I think the bigger opportunity is to stay to the long side. Not to say that it won't go short. We're going to find out what the deal is. You're going to figure out what the future of this monthly candle is based on the daily right here, based on the reactions that happen. You're going to get those clues here pretty shortly. But I think that the probably the better opportunity is to the long side, staying in trend. And the reason is because we had such a clear reaction on the monthly off of this previous expansion level. I mean, that clue right there says that, hey, the next series of green candles is probably going to be, relatively significant. When you see that reaction and then you have a green candle, what that tells you is that there's probably a pretty good chance that this candle is going to close green. If this candle closes green in 14 days, what does that say to the next 14 days of what's going to happen in price action? It probably says that predominantly out of the next 14 days that happen, are the best opportunities are probably going to be long. Does it have to happen this way? No, this is just a trading idea. So you have your management points, you have the expansion levels, you got liquidity lines to shoot for profit targets. That's at the end of the day, that's where you need to cut, you need to manage your trading plan. But it all starts with an idea or a feeling, with some probability behind it, and the probability is always in the trending direction. So, that's, I think, for the long term, that's where I would hang out and look for. I'll just put it this way. If the market, you clearly see that it's going to go short on the daily, if you're trading the daily as your directional bias, I would go with that. But if you're looking to trade the daily into the monthly, I would probably stick to the long side. Again, just my opinion. Whether it's right or wrong, I don't know yet, but you do have your management point right here. So if you were going to go long, you could look for an entry right above here. If you're going to go short, if you start to see we get a reaction off of that, that'll be pretty clear And if you're wrong, you're going to know on the tipping, this is going to be where the scale tips. So you should know relatively quickly. So that's what I think about that. Let me go to daily over here. Switch this to a 1 hour. Bring up the microscope a little bit closer. Okay, so now let's look inside these last few daily candles. Let's see if we could find any clues. Okay, so I see at this box right here, swing low, swing high, swing low. So we got 3 expansion legs out of this central point. Let me see if I see any other significant ones. Swing high, swing low right here, swing high. So there's 3 expansion points out of this central point, which we could see this came down and kind of hit. So what this is starting to feel like, you know, right now, this feels like, honestly, kind of a long opportunity. Yeah, it feels kind of long. Here's why. Because the way if you look at this expansion, swing low, swing high, swing low, you know, there's the trend. If you're trading the hour into the daily, you can see you have a green candle right here, and the monthly is green as well. Okay, so you got 2 higher time frames in your favor. You're holding green over here. When you clearly understand the trend, at least by the color candle, we're at a decision point here, but by the color candle, if you're only looking to trade in that direction of that color. So the daily's long. So that means you're trading only the swing low points. This was a swing low out of the box. So there's your first opportunity across the box. It didn't take off. You cut it. This is your second swing low right here. Now, if you go long right here, you can. Again, disclaimer, you guys make your own decisions. This is just my opinion. Listen to it or don't listen to it. Doesn't matter. Do what you want. But just my general opinion. If you go long right here, you got to think about where if I'm wrong, always start with risk first. If I'm wrong, what needs to happen to prove me wrong if I buy the market right now? What needs to happen? And I'm going to go down and basically, you could feel it out through price action, or you can go off of predominant lows and highs and expansion levels. If you go long, I would say, there is a chance that this can crawl down to this low right here just to mess with you. So you buy the market, now next thing, okay, it's going down, breaks the low, and then boom, you get another big reversal. That is a possibility. If you go long right now, you have to be prepared for. So if you understand that, then you would want to understand your money management. You need to, in your trading plan, you need to be able to weather the storm from here to here, because ultimately you're really not going to know if you get below this expansion level. I'll tell you right now, the future of this is probably red. And if the future of this is red and you get below that expansion level right here, then what that means is you got a rejection off of that expansion level on your daily, and now you're trending downward, right? You're going to know that right here is kind of, in my opinion, judging by the framework, that is the do or die point. So if you're going to enter the trade from here to here, that's your box. Now, here's a few scenarios. You can test this entry, because if you're right, if this holds green, guess what? You're coming to this high. So that's your initial upside. 418 points, 41.8 pips, 42 pips, we'll call it. That's your upside, okay? But if you understand your downside right now is still, to see if you're wrong it's about almost the same. We'll call it the same. It's about 42 pips to start playing with this level down here. So you have kind of a 1-to-1 at this point. So what you could do, and we talk about this, I've talked about it before, is layering into or exploring a position. Let's say you don't quite like that drawdown, you have a 1-to-1 ratio. You can take your money management and trade something much smaller. Say take the normal position size that you want to trade, cut it into thirds or cut it into fifths, like 1/5 of the position, or 1/3 of the position. Because in reality, you have a box between where we're at right now and this line down here, or I would, these are general ranges. Usually the lines, they react to them pretty specifically, but I would give yourself, like a 15 pip range once you get at this line to see what happens. But that's really your box. So again, it could crawl down here and decide that it wants to blow people out that have already gone long. It wants to blow them out before making the big move up. That could happen. So if that happens, let's say you put in 1/3 the position here, and that, if it goes, well, guess what? You're not making as big of money as you want on the move, but at least you're in the game. It's better than nothing. If it goes against you, you can layer the rest of your positions in up till this point. You can do that. And let me clarify what I'm saying here. I'm not saying layer into a losing position, because that is a rule that everybody that's been trading for any significant amount of time knows. You do not add to losing trades. So what I'm telling you right now is I'm not telling you to add to a losing trade, because it's not going to be a loser, in my opinion. Just me talking out loud here. This is not going to be a loser until we understand, if it goes against you, until you understand what happens at this level. This is the level that I'd say forget it. I'm not going to risk going below this level and going into a significant downtrend. So you have kind of an entry box between where we're at and here that you can build a position and get a better price point. Because ideally, what would have been nicer is if you got your entry down here. But that, looks like it happened pretty rapid. We'll look at the lower time frames in a minute. But this looks like it happened pretty rapidly. And at the moment, let's be real. Like if this happened as rapidly as it looks, judging by the wicks on those candles, down there, you probably might feel like this thing's breaking out short. So not a lot of people are going to feel confident enough to rip the trade on those wicks. Realistically, they're going to be looking at the turn like where we're at right now. So that's a scenario you got to be prepared for. And you can decide, I'm going to trade a much smaller position to explore the trade. I want to have some skin in the game. I would much rather be down here, because the closer you are to the decision point, which in my opinion is this line, the heavier you can go. Say you want to open your entire position according to whatever you're doing, your money management rules. Well, now you're just from here to here. You're closer to the danger point. But up here, you're too far away. Or I mean, you could do whatever you want, but that's, if you open your full position here, you're going to, if it tests this low again, it's not going to feel that great. So anyway, just something to think about. Just one of those little tactics you could use if you choose to. But just remember, the tighter you are to the danger point where it's go or no go, then the more you could potentially up your position size according to what you feel you want to do, because you're closer to your out, and you're not necessarily risking a bigger percentage at that point, because you're tighter pip wise to knowing if you're right or wrong. So that's really the ideal trade placement is really, I mean, that's everything, is waiting for the best trade placement. But if you miss the trade placement, doesn't mean you can't get in the trade. Just do it at a much lower size, just because you're far off from that point. It's not good or bad. It is what it is, and you got to work with it. So let me switch over to the 1 hour here. Let me switch over to the 5. Okay, so now inside the 1 hour, now we're trying to enter the 1 hour, and you could do this even if you're trading the 1 hour, you can jump in and look at the lower time frames to see what's going on. So, I don't know, we may be getting a reaction off that. We'll see what this 5-minute candle does. If this 5-minute candle starts making a run down, you can judge if you want to trade the turn on the hour. You can see the architecture. This right here, this box and these expansion lines between this expansion, those are the significant points within these last 2 hours, 3 hours. So what happens in this framework in here will help you understand the future of where these candles are headed. So you can play it all together. I know it may get confusing. This is something that is probably going to take, if you're new to ATS, I'm going a little deep at the moment. Just study the basic strategy in the course just to get started. But what I would like everyone in here to graduate to is using ATS as the chart map. Come up with your own ideas, because you have something that gives you sensitive framework of the market. You have actual sensitive hard levels. They're not repainting. They're not changing. They formulate the same ways every single day. So you can understand, the more you understand like trading close to the danger point, and position sizing, according to smart money management rules, then you can come up with your own trading ideas. You can be creative, and still have good discipline to your approach and your strategy, just using it as a map, to figure out, where's the best opportunity. And that's really, at the end of the day, I would like everyone to get from the basic strategy. You'll always be looking at the trend, because you always want to start from the trend. If the money's flowing one direction, there's no sense fighting it. Just go with the flow. But there are situations where you could do counter trend trades. You could do other things if you want to, just looking at the framework and just being familiar with how price behaves within these lines. So you can see we're starting to push down a little bit. So yeah, I would, based on this 5-minute candle, I'd give it a little bit of time and see if it may be coming down and get a reaction off this level. So if you're looking to enter on the hour, I would probably see, if the 5-minute gets much below here, then this hour is probably going down to this level right here. It's probably going to make a run all the way down. So, right here, that's, can bring up the microscope on that even more to help you kind of manage that, and just figure out what the story is. You may be wrong, you may be right, doesn't matter. At the end of the day, you just need to have the winners be bigger than the losers, and be able to explore the trades and the ones that you have extremely good entry to, that you're close to that danger point, that knowing point where you're right or wrong, then the ones that you're right on, you could go heavier on those ones, and then the ones that you're right on will be worth more to you. Okay, so anyway, that's pretty much what I think about franc yen going in depth. I'm going to look at gold real fast, and then we'll get into some of the pairs that you guys were requesting here. Okay, so monthly on gold's been green for a long time. So how many months did we have to buy the market? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we're over a year now that you got to trade long on gold. We knew that down here on the monthly when we expanded and we're above expansion line. So if you were investing in gold, even just buying spot prices, even if you're buying and holding physical gold, you can look at that monthly chart as your guide, and you'll know right now price is climbing up. Would you be going heavy if you're buying a bunch of spot, precious metals at the spot price to hold, like from JM Bullion or doing stuff like that? I don't know if right now is probably the greatest time to go heavy. If you're investing for the long run and you just want to hold precious metals, that's kind of a long-term thing. But if you're looking for the best pricing right now, I'd wait to see some more red candles on gold. But with the economy and what's going on right now, those red candles may not come, because gold prices are going to go up with economic uncertainty. It's like Robert Kiyosaki says. He says gold is God's money. So it's been here longer than any of us, and it's never going to go anywhere. So above Bitcoin, above all that stuff, I think gold's always going to have a value as long as humans are transacting with each other. But that value is going to go up with economic uncertainty. So may have missed the boat on this one, for at least for best trade placement. Notice that we're getting through this expansion level back here. So pretty much if you hold above that, we could very well be making another big run up through the highs, similar to we had back here. This was 2008 through 2011. 2008, a lot of economic uncertainty with the housing crisis, all that stuff. It just pushed gold prices up through the roof. You could see that corrected. This is, 2008, 2009, the economy was crashing right here. And you can see that the gold prices inflated like crazy. But notice where the correction came to, because the corrections are going to blow out all the weak holders typically on a proper correction. The weak holders, everybody that says, oh, gold's hot right now, I got to buy gold, and they may have sold out here, but most people, if you go to the pain and pleasure video, most people, when they're in the money on a trade or an investment, are going to go out, they're going to be popping bottles of champagne, buying everyone dinner, you know, and paying for everybody at the bar, and buying new cars and everything. And they're going to do it based off having paper. They haven't closed a trade yet. And what ends up happening is that while they're celebrating, thinking it's never going to end, then the correction comes. They're gonna not take the maximum profit. They're going to get out when their pain threshold gets pushed too much. And that pain threshold could get pushed from losing money. Even if you're making money, even if you're up 100, 200, 300 grand on a position, you know, you're like, okay, I'm up 300 grand now. Okay, now I'm up 200 grand. Okay, now I'm up 100 grand. Now I'm up 50. Okay, forget it. So you can experience that pain from losing profits. It's not necessarily from being at a loss in the trade as well. So, but notice where this correction came back to. It came all the way back to right here, looking at this expansion range. Now, if you were just going with the trend, you guys know from the basic strategy, where was the ideal trade placement? Right here. You had this on the rotation up through expansion right there. And notice the correction came back. And even if you were weathering this storm, if you're a long-term holder in gold, if you were weathering this storm, you still had a strong position down here. Yeah, this sucks, you know, because you saw this profit up here, but at least it's not, you know, if you took your dentist's opinion and said, hey, buy gold back here, you know, or when they're getting in about right here, same thing that happened with Bitcoin, you're feeling nothing but pain. So what I'm trying to say with this, I'm sorry to get off topic a little bit, but what I'm saying here is that when you're trading in trend, strong entry points in trade placement gives you choices. It gives you the ability, if you're going to hold long term, because you got in a place where most people thought the market was turning right here. But no, you see the trend is up. You see we're below the tilting point. This is the expansion level. Market is doing this even back then. It never changes. That was a strong entry point, was back here. This is where you could defend your position. This is where you can hold strong through adversity. It was back here. It wasn't up here where you were getting the tips and it was coming out on CNBC, you know, and all the news channels saying that gold's going crazy or Bitcoin's going crazy or whatever the hottest thing is. It was over. So anyway, just a little lesson to think about trends right there. Same thing right now. Do you think this is a strong or a weak position? It could definitely go. But I'll tell you right now, if you buy gold right now and then you see a red monthly candle, man, you're going to be in pain immediately. Whereas the trend started coming up off the low right here, expand low, expand high, started building. You can see we started stacking expansion lines long. If you're not using a directional bias time frame, just look at the framework. Expansion low, expansion high. Simultaneously, we held the expansion low, starting to respect the levels. You knew that down here. Up here, this trend's going long, below expansion, still above the last expansion point of the turn, up into the trade. Strong position down here. Even a strong position at expansion, because now you're at least at the tipping point. Buy the breakout right here, fine. Because you know if it turns quickly, then you can get out immediately. Up here, man, you got no framework. You know, if everything comes back, man, it's coming down here. So long-term gold, I think prices will always go up over the long term, but trade placement can be the difference between, you know, making just like an average return over the course of 50 years or crushing it. Is all trade placement and timing. So anyway, just something to think about. Again, like I said, just my opinion. So going to the daily into the monthly, this is a different time frame. So now we're talking about you're not holding as long. If you're trading the daily, this is more of a, you know, I don't think you're buying spot or metals at spot prices to hold in physical form. If you're trading the daily down, because it's like you're not going to buy and sell your physical gold every week. That's for sure. So you know, just for trading purposes, trading the price, you know, you had your last entry right here, came down. We're rotating off this expansion level right here below. Now we're playing with this expansion. We got a green candle. This very well, you know, may be breaking long. So right now you're at the decision point, but if it doesn't, let's look at the overall expansion range, because I do see a lot of stuff happening in here. So let's see, swing high, swing low, swing high, swing low, swing high. Okay, so we're at another swing high point. The most significant part of this range is this box right here. We have another swing low, swing high, swing low, swing high right here. So another significant one right here as well. So between these two, this one a little more recent, you could go off of either one. And notice that each one of these has the same swing low point. This one is a swing low, swing high, swing low. This is the same swing low point from here as well. Swing high, swing low, swing high, swing low. So pretty significant swing low point, also held the expansion level back here. So a lot of stuff went on here. That was probably institutions getting into the market at that point for the ride up. Let's see what, oh, March. This is when it crashed, right before, when coronavirus and all this stuff was coming out before the next run up. Very convenient. The crash holds expansion. Economy keeps falling apart and gold goes up. Interesting story behind there, but we won't talk about that anymore right now. So anyway, you're at the expand high point, but notice it's dancing above this expand high point up here, which is the expand high point from this box and this box as well. Same point. We're starting to hold, so I wouldn't be surprised if you don't go on another long run here. But I think the ideal trade placement was back here. If you're going to buy the market right now in line with the monthly, the monthly it's gone pretty good. Now it can continue to keep going and going and going. I don't know, but when it comes to managing a position on the daily, this is kind of the decision point. If you buy, if this candle reverses on you, if you get much below this expansion level, I would just kill the trade and wait it out and see if there's not a reversal. If there is a big reversal, you're probably coming down to this expand low point back from the origination back here. Probably. Don't know for sure, but that's a scenario I would definitely weigh out in the world of what can happen with this. If it goes long, I would look to get above these liquidity lines here, hold above, see aggressive price movement, and I would just close the trade out here. Or if you're going to hold, look for the monthly to work up to these liquidity line levels and just bank the profit and look for another trade after that. Anyway, we'll go to the daily into the hour right here. Okay, so it looks like hours showing a similar story. This last push low right here. Well, let me look at this real quick here. Okay. Okay, so pushing from back here was a rotation coming out of the box. So this was the box. Right here was a spike down. Okay, this was coming back up. So looking at the daily, now let's go back. Remember I was talking about right now that the daily, the last strong position on the daily was right here. So if you were trading the daily into the monthly and you see the daily rotating green, but you don't want to just jump in on the daily, you want to find something lower on the hour. Look what it presented a situation to you right here. As the daily was rotating long, you had an expansion, you had that framework inside that. So you could have, if you wanted to, you could use the 1 hour in situations like this in the future. You can use that 1 hour as you expanded low right here on the rotation of the daily to enter into that green candle. And you can do that because you may say, well, doesn't that go against the rules of the basic strategy? Because the daily would be under expansion right here, right? So you'd be looking to only trade short if you're trading the hour into the daily. That's true. But if you're looking for the daily and you're looking at the daily into the monthly, you know that the monthly's long. So there's a good chance that a rotation below expansions and at least come to expansion, and if not go above like it's doing. So if you're looking at the bigger picture, you can take this trade right here based off of the predominant trend and the fact that you think that, this daily, there's a good chance we're going to traverse the box. We're going to come to the high. So you can take this buy opportunity if you want based on that as a trading idea. Up to you. That's a little more advanced, but the trend is a trend. The monthly is still long. It's going to go until it quits. So I would work the trend until the lower time frame stop paying you and then wait it out. Right now the daily looks like we got a reaction off of the expansion level right here. And same thing, we're starting to hold on the 1 hour above expansion, and looks like we could start building up through these levels as well. It kind of goes in line with the whole premise of the overall market. When all the time frames start making sense with each other and the framework starts making, it all falls in alignment where the clues on all these time frames are starting to work with each other and all point to one direction, that's where you start to get that sense of knowing we're like, okay, I could see what's going on here. If you don't have that, you can always just stay out of the market. No one's making you get in a trade. It's not about being in a million trades. It's about being in trades that make sense to you as an individual. Doesn't matter if they make sense to me. Doesn't matter if they make sense to someone else. They need to make sense to you, because at the end of the day, you're the only person that's going to pull the trigger and manage that trade through. So it has to be you that comes up with the plan to manage it. So, and you guys have the lines here to do that. We'll take a quick look at the hour, and then I'm going to get into some of the other pairs that you guys listed. I want to get to those before. I apologize for going long on this. Hopefully you guys are getting something out of this, and it's not just me going off here. Okay, so the hour into the daily, we're starting to get above expansion. That's putting us, into the momentum move here. It's still pretty early on the 1 hour. Remember, if you're entering on the lower time frame, you want to feel like there's a future trend to the higher time frame. This does look like that that 1 hour. I would not be surprised if this doesn't climb up at least to these highs for a quick pop on the 5. Ideal entry was down here on the turn. Now you're above. You could buy a move like this, but remember, your danger point for the future of this hour candle is really this expansion line. So if you buy this market right now, and then your worst case scenario, you get a red candle in that 5 minute, I really wouldn't go much below here. If you go below here and it starts getting down into this neighborhood, then you're probably just getting a more, a bigger expansion range. So if you're going to buy the market like at this moment, I would expect immediate performance out of this trade. Immediate, like it's going right now. If it starts to fall apart, this is the tipping point. This line right here, between this line, and this line right here, those 3 lines are going to tell you the future of these 3 1 hour candles. Listen to what they say and see how price bounces with them. So that's what I got for you on gold. Let me take a minute. The chat's blown up with comments, and I apologize if I can't get to all your guys' comments. You guys, I appreciate the interaction, but I'm going to try to take the few that I see here that I think that most people can benefit from, and I'm going to try to address those. Some of you guys are typing in some markets here that are CFD markets, and I don't have those available on. We use this FX Choice demo account for the webinar computer, and I don't have all those, but I will look into getting another account that has some more things that we can look at, but I don't have some of those. Basically, what you guys see on this list right here is what I can show you. This is everything that FX Choice lists. So if you see it on this list, then I'm more than happy to look at it, but some of the ones you guys listed, I don't have access to on this particular one. So let me take a minute. Shane, if you have anything you want to add to what I said there, feel free. I'm just going to take a minute to read some questions here.
Yeah, there actually was something that I wanted to bring up. So if you look over at the hour, we can see a clear reaction to the previous expansion line. Price came up, bounced off of that. So, that's definitely a significant point. If you're in a trade right now and price kind of struggles to get through that, that could also be something to cut the trade off early. Say you were able to get in, you're up a few pips, and it's just not really getting up through that level. We'd really want to see it just get to that expansion line. It's tested it. This would be the 3rd time that we've gone up to it. Again, that's the previous expansion line on the hour. We'd really want to see price just break through that. We can always expect that there's going to be a little bit of a breath at that around those points, which I would say we're going through right now, but we'd want to see price just break through that. And if it didn't, you were sitting in it, wasn't able to get through, then that might be a reason to get out. We always get a lot of questions about managing profit when it gets to some of these levels, and that would be one way to do it.
Good insight, Shane. One question I'm gonna jump into. We have a question about ATS assistant, and I'm gonna cover this. We have that update, and we'll talk about the update here at the end of the webinar. But the ATS assistant is always something that comes up because people, especially people that are new with us, they see that, okay, we offer some sort of, expert advisor signal something something, and they sign up. And even though the training says, you need to learn to use the chart map first, learn what the meaning behind the lines are first, they just jump into that, they apply it, they use it for one day on a 1-minute chart and say that it doesn't work. And they get mad. So whatever. I'll say it over and over again. You need, number one, you guys need to spend time learning about these lines manually. Watch them build some experience, because the ATS assistant, the way it's designed right now, is very basic. It's just looking for counter trend liquidity and the color of your supporting time frame that you set it to. If you're going to use ATS assistant, you still have to filter out those signals, and the grade A are always the best. Because those are the ones that are either going to pay you the biggest, or they're going to fall apart immediately, typically, and you're going to know that right away. But in order to, let's say you have it set up for a grade A setup, and you get a notification. Let's say you're running it the 15-minute into the 4-hour, let's say you're running the 5-minute into the 4 hours, your supporting time frame, and boom, you get a grade A trade. Here it comes. Do you just go over and say, oh, I got a grade A signal on euro dollar? On my 5 into the 4-hour, and it says buy, and you go over and open your rate button and you buy. If you do that, you're using it completely wrong. What it's doing is it's notifying you that your higher time frame has just changed into a new color, so it's out of rotation according to a Heikin-Ashi candle, and that you are below or above expansion, the first expansion, documented expansion on your lower time frame. So what it's telling you is that there is possibly a good situation forming at a possible turn in the market. So it's giving you that timing and say, hey, it's time to go to work and actually analyze this pair. So when you get that signal, you need to go look at your higher time frame, and maybe even like if you're using a 4 hours, your supporting time frame, maybe take a glance at the daily and the weekly as well, to see where those are. Are they trending? Are they in a box? What's the mood of those time frames? When you get that, then you decide, do I want to look into this grade A signal further? Because at the end of the day, if you're going to take the grade A signal, remember, there needs to be a future trend. You need to feel there's a future trend possibility in that higher time frame. So don't just blindly open the trade. Think about it for a second. And look at the framework. Look at the framework on the lower time frame. See where, if it's a grade A buy trade, where am I going to be wrong? It's the first expansion. Is there a prevailing trend already established on the higher time frame? If I'm wrong, where do I know I'm going to be wrong at? Is it still a good opportunity? It's just alerting you to the possibility of being first to a trend. Do they all immediately work out? No, they don't. But it's good to know about it, because that's an ideal situation. It's early to the trend. And remember, if you're early to the trend, you have the biggest possibility of being in an extended move, and you're close to the danger point. If the trend if a trend works, it's huge. If it doesn't, quickly. That's all it's supposed to do. It's not magical. It's just supposed to take some of the work out. If you want to trade the very first opportunities in a trending market, or a possible trending market, it's good to know about it. There's nothing more frustrating than waiting and babysitting a market, and you walk away, the perfect entry comes by, first expansion right at the turn, in trend on the higher time frames, multiple higher time frames in trend, and you're standing, in your living room drinking a cup of coffee. Super frustrating. That's all ATS Assistant is supposed to do, is give you that little bling. Time to go look at the charts, see how you feel about it. But you won't know how to feel about it unless you've actually put in some screen time to learn what these lines are telling you. So I always say I would give it, realistically, I give it like 30 to 90 days before you even really look at ATS Assistant. Find out with the framework, the chart map gives you what kind of opportunities that you understand. Remember, it's about you as an individual and using the sensitive price levels. Figure out what you understand and then see how you can apply the signals in ATS Assistant to help you be more proficient at identifying that situation and being proactive about being on the screen when that's happening. That's what it's supposed to be for. Now, the updated version that's coming out is going to have more filters on that as well. So it will be more in line with the basic strategy. You'll be able to turn on that filter if you want only those ultra filtered opportunities. But the way it is right now is just so you can have the creativity to look at different turns. You could take counter trend trades if they make sense. That I wanted to leave the first version open so that people with more experience can, they're going to naturally filter out those signals to see which ones are, they want to interact with and which ones they don't. So anyway, going back to that, it's always the question about using the ATS system, regardless on the pair. Just think about it from that point of view and use it like that, and it'll be much more of a help than a frustration if you approach it that way. Okay, Shane sent me a note, said let's move on. So I'm going to move on.
Real quick, there was one thing, Wade, that I wanted to bring up. So got a question a little while ago. How do you identify the danger point? You used that term a little while ago, and that basically just, more or less means, where to get out. So on this little trade right now, and again, you can apply this to any time frame that you're looking at. All the time frames are the same as long as you use a smaller entry time frame into a larger one. It's all the same. Doesn't matter if we're looking at the hour into the month or the 1 minute into the hour. It's all the same thing. So on this trade, we're up above expansion on the hour. We're coming up to a previous expansion line. Like I mentioned, we're getting a little bit of a reaction to it at the moment. But you see on the 5 minute, on the second to most recent expansion, we came up, brushed up real close to the liquidity line, and then came back and we had a little bit of a reaction to the previous expansion and then started pushing up again. That kind of tells you that that's an important price level. It may not be the best entry. There's definitely better entries in here, but we know that that's an important price level because the market told us that it's an important price level by reacting to it. So if you were to get into a trade right there, it comes up through the liquidity line right there, because it told us that's an important price level. If it goes back down through it, as Wade, to what Wade was saying earlier, we would pretty much want to dump the trade. Because now that it's taken out that liquidity line, you guys know that when that happens, it's usually something's going to happen. It'll either keep on pushing or that's a point where it likes to, go into a reversal. So now that we took out that liquidity line, it is more important than ever that it stay above that expansion line because it should just take off if it's going to go. Between it coming up to that hour expansion line and testing it, and then also taking out that 5 minute liquidity line, it should pretty much go if that's what it's going to do. So if it comes back down, that it holds red and comes back, that would be an example of how you identify the quote unquote danger point. Just let the market tell you which lines are the important ones and then manage your risk off of those. Like another, for instance, if you're using the hour, we saw that price came up and it rotated off of that expansion line. So if you decided that you wanted to short the market and then it came back up to it, then that would be pretty much how you manage your risk. It can get a little bit tricky because sometimes it's not always an exact, like on the hour, we see that the wicks came up through it. So, you kind of have to expect stuff like that. But for the most part, you would manage your risk off of the levels that it tells you are important by you getting a reaction off of them. So anyways, I just wanted to speak a little bit to identifying the danger point.
Yeah, and that's the market. Remember, ATS, these are not based off of moving averages. We're not smoothing over price. We're not changing settings based off of X amount of bars back. The market sets this framework based on the price action, based on the cycles of the market. So it is what it is. We are adapting to the framework. We're not casting what we believe it should be. So, if there's no good entry, then there's no good entry. if you're too far away from the last, levels of structure with the expansion levels, wait for something else. Let it come to you rather than you trying to make something out of it that is not probably a good place to deploy your funds at. You guys can do whatever you want, just like I said, just opinions. So let me get into Euro NZD. We got from Benjamin, day one, H1. Let me take a look at that. Here we are. Okay, so there's our daily. Okay, so we got some stuff going on here. So what's the situation here? If you're trading the hour into the daily, we had this run down on the daily. We've pushed up. We've had one daily candle go red, and now we're green. I would probably, because you got a red candle here, I would probably stick to the short side. If you have to make a trade, if this is one of your pairs that you're following, personally, I'd probably stick to the short side. I think the ideal opportunity was coming out of the rotation right here, and it was probably at this rotation right here. And I know that the hour candle is green, but this is obviously a candle of indecision. We got stuff going here, so let's just, if we got to come up with a future of this candle, we need to say long or short. I would probably, whether I'm right or wrong, I would probably say short for two reasons. One, you're under expansion. Two, you've already had a previous red candle close. So, if you guys look at Heikin-Ashi candles, that's one of the benefits of using these is that they go in series of green and red. It's not as often. You get far more candles that are back to back one color than one-offs like this that are just one green or one red. So just for the sake of those simple facts, I would probably stay short on this. And you got to look at your decision points right here. This is really the decision point at this moment. If you go short, if you're wrong, which very well may be, if this goes green, you're probably coming back up to here. But right here, I would look at this expansion level really as a tipping point. You've respected it once, but if we come back, because you're also respecting this levels here, so you can see between these two, that's your box right here. Price is just trapped between these two expansion points. You're gonna know what's going on pretty much at this level. I would say is really the telling point. But ideally, remember, going back to what I was saying before, it all comes down to strong entry. If you enter right now short, you have a weaker entry point. You can do it, but do it at way lower lot size. 1/3, 1/5 the position you would normally trade, and then add to it should it keep going. Because right now you're really not going to know if you're wrong or right until you get up to this level. If you go short. Other than that, you're going to be feeling out price action, which is never a good thing. You really want to go off of for your danger point, like we're saying, the point of decision, you really want to look for a hard level that you can deal with. You don't want to just go off of how you feel prices just pumping up and down. That's kind of a screwy headspace to be in, especially on lower time frames. So really the best entry, I think, was on this rotation up here. Because you had the previous red candle close red, and that was more towards the high of the overall expansion range that's happening in here. And that was, if you're in that, then you're in a much stronger position. You're still in the money, and if you were up here, then I would expect you're going to hold below, you would be trying to hold below this level. If you get above, then you'd close it at a break even, and then you would at that point have new information about the future of this daily or the possibility. So it's really up here, and that's what I would base your analysis at.
One other thing just to add in, out of the most recent box, you could pretty much draw a line right off that. We had expand low, expand high, expand low. So if it does continue, I mean, you look at the daily, it's pretty obvious that it's you know, overall short right now. So if it were to hold down below that, down below the middle of that box, then that could be an indication that it's going to stay short. Not to say that it can't break the high, but then it can also break the low again. So it's just going through the whipsaw at the moment. That kind of started a new range for it to go through. So yeah, just watch how it reacts right around that middle line coming out of that, or that expansion line, excuse me, coming out of that most recent box.
Yeah, so that's definitely, the next thing I was definitely going to say is that expansion point right there is, or Shane, I was actually going to move on to the next pair, but good thing Shane brought it up because it's something I should have said. Expand low, expand high, expand low, is something else, you know, that you could look at, because there's a possibility this expand low point, this is the last expand high point. If we do get through here, good chance you're going up to break this high, and at that point, you know, this daily future, that candle is probably going to hold green. So, and you only got 3 hours left on, at least on my broker, the way they set the time scale. We got 3 hours left roughly. So, you know, we'll see what happens with it. But anyway, this is between those are your management points. Whether you go long or short, that's where you're going to know. You're going to get all your information right there.
One thing I wanted to bring up, just about the expand high, expand low, it can get real tempting to just start ripping every time you break through a high or a low to start, you know, to try and rip that trade. And that's not usually the best bet. If you're going to go along the lines of that approach of, you know, trying to get in when it breaks through a high or a low because you've identified, you know, the origination point, your best bet is going to kind of just to stick in the overall trend always. You know, if the overall trend is short and it breaks through an expand high point, and then you want to manage that, then that would be your better bet. Like in this example on Euro and ZD, we can see that we're in an overall short market. So if you did decide that you wanted to try to get into a short trade, if it went and did break that expand high point and took out that liquidity, and then you got a little bit of, you know, maybe some new lines that you can manage your risk off of, and wanted to try that to the short side. And again, prefacing that you've got some lines to manage your risk off of, because you don't want to just jump in and then not know where to get out, or not have a good reason why to get out. But you get some new lines, then you can manage your risk, and then you're assuming that that was this expand high, and then you believe it's going to stay in trend. That, you know, that would be a perfectly reasonable thing to do. But again, you need to have lines around at that expand high, so you don't just get in, because if you don't have lines and it just keeps on going up and you don't know where to get out, then that, you know, I hope, hopefully I don't have to explain why that's not a good thing. So anyways, just a little thought to throw in there.
Yeah, you don't want, if you don't have the framework to manage the trade off of, wait till you have the framework. Not having a clear defined yes or no point, you know, good or bad point for your trading decision is like floating out in the middle of the ocean in a life raft with no paddles. You know, you're just like, okay, I entered. This is hopefully, you know, hopefully it works out, and that's, you know, this is not a good place to be in. So I'm going to jump over to NZD CAD. And then we had a request for the 4 hour into the 1 hour. And I'm going to tell you why, from Donald. Appreciate you asking for this, Donald. But the 4 hour into the hour is okay to establish momentum. So if you're trading like the 5 minute into the 1 hour, that's a good enough separation. And then you can use the 1 hour into the 4 hour to confirm momentum of the 1 hour. But trading the 1 hour into the 4 hour, there's not enough time frame separation typically, and it's going to throw you off, because by the time the 1 hour shows you an entry above or below expansion, it's going to start to change the color typically on the 4 hour in a lot of cases. So what ends up happening is that because you don't have enough time separation, there's not enough stability to the process of forming a directional bias. So I can't really tell you what to do too much as far as, you know, the strategy of the basic strategy of looking for a trend, looking for counter liquidity pullback based on the lower time frame, because this lower time frame is they're just too close. You only have 4 periods that make up 1 period over here. And they're just you're just going to be dragging yourself around the chart with every turn, because it's just, when you feel the 1 hour is a good entry, well, the 4 hour doesn't look good anymore. Best thing to do is dump the 4 hour. If you want to trade the 1 hour, and jump up to a daily on your chart, trade a daily. And then if you want extra confirmation, back the daily up by a weekly or a monthly. A daily into the weekly will show you more stability of momentum. And then use the 1 hour to find where things are underpriced or overpriced according to value of the expansion lines, and then rip the trade. So anyway, that's just wanted to bring that out according to those time pairs. Let's go to pound yen. And requested time frames are hour 1, 5 minute. Okay. So hopefully you guys can see on this chart where the entry possibilities were on here. Short on the 1 hour, below expansion, going to basic strategy here. Had the push down right here. You're missing this. Grade A trade was right here. That you would have got a grade A signal right there on the top of that expansion box. So that would have been your first entry opportunity. You very well may have taken that. Let's say right here on the rotation. Your reference point was this expansion line right here coming out of this box. What happened in this scenario? If you entered short right here on the rotation, you got below, you saw a little bit of a profit, but then came back up through. Should you ride this trade all the way up through here and then up through here? No, because the minute you got below this expansion level that's the point that you're expecting for it to hold below and keep going. The minute that it rotated up and came back through here, you should close this trade at a small loss or break even if possible, and wait for more information. If you entered again right here on this red candle, same situation. You're going to get red, you're below expansion. Is it holding? No, it's starting to respect it again. Close it again at break even. Do not lose too much money on these. There's no need to. You do not need to ride this negative up to here. And see what
just to kind of, or wait, I just wanted to make a comment. When you see that price came up above and then whipped down that final red candle before it popped up on the 5 minute, that's kind of like the final nail in the coffin. As soon as it goes, we haven't formed any other expansion lines really at that point, and then it goes and rotates off of an expansion line. That is, if you're in a trade to the short side, that's a clue to get out and close your trade. If momentum was long on the higher time frames, that would have been an entry, where you see a level that price tells you to respect, that price reacts to, and you see a clear reaction like that I'm sure a lot of you have been in a trade and then you see something like that, and then 10, 15 minutes later it starts going against you. So that's an important little clue. Just keep in mind that if it's gonna rotate off of an expansion line like that.
Mm-hmm. Yeah, and those are the clues. It doesn't mean that the trend's still not going to go later on, but what it's telling, remember, the expansion lines, it's the framework. Ask yourself, if I enter the trade right here, what needs to happen for this to work out? You need to get through expansion right here, at least the last reference point you have. You need to hold, and you need to start working your way down. Did that happen? No, you knew that right here. You knew it right here. Take the spread loss. Take it. It's called those losses when it's based off of information. Those aren't those are not losses. That's business expenses for being in the trading business. You're paying for information. And so when you're putting the framework together, you're working the trend, you're working a solid plan. Whatever you guys decide is your plan based on the lines. When you're wrong, if you're just throwing a trade out there, you're just throwing it out there, I'm just going to go long, and you have no plan behind it, well, now you're gambling. And it's maybe real exciting. I know people have gambled in trading with a lot of money, and don't get me wrong, it's really exciting. But if you're feeling that excited, you're probably not doing very well. When you take a loss based off of what Shane said, what I said right here, doing stuff like that, you're dealing with framework. You're getting information. You're paying for those clues. You may pay it multiple times, but take the clues, explore the chart frame. If you're not super confident, do it at a lower lot size. That's up to you guys. As we came back up right here, you're still above expansion. We still are under expansion over here. This was the next one right here. If you cut the trades down here, you re-entered up here, you're still going down. You're still going towards these reference points. You have 2 expansion lines you got to get through in order for this to be a payday. Down through here, down through here. Now we're coming back up. We need to hold under this expansion level. So right now you're coming up to that point, but really, I mean, that was the opportunity right here. From here to here, you're probably going to expect, and hold it realistically, you're probably closing the trade right now. So, even if you were in for this whole thing, this market's just, it's tough. It's not really doing much. So, but that's why prices getting held up right now on this level. So it's a decision point. If it holds below, then, and you're in up here. But again, going back to kind of, I guess you'd call it a theme of what I'm talking about today, is the strength in position. Because you're trading above expansion in a down market on the higher time frame, you're able to close these trades at break even when they're not working out, and it's not really damaging you that heavy. Even up here, you have a strong position. Even if this doesn't work out, this is strength up here. This is weakness down here for your trading position. If you're short and you go short down here, like a lot of people, they look to break through the lower low. They'll buy it down here as you break through this previous low. It's not a strong position. And what ends up happening is that a lot of times it retraces as you break through lows, and now you're in. It feels, what usually feels like is the best time to just jump in and you're going to get a quick profit is usually the weakest position, because everybody has seen that at this point. Right here was the strongest position, because at this point people feel like there's, this market's rotating. This is counterintuitive right here from what most people would feel like in the moment. But you have the magnetism of these lines down here to help, even if you're wrong, to help let you off the bus. As long as this holds short over here, you're going to come back and gravitate towards these expansion lines. And these rotations above in a down market those are your strong entry points. That's what it's really all about. It's not about being right or wrong. It's about having a position that you can defend. So anyway, that's kind of what I think about what's going on right here. Overall, market doesn't seem to be that great, but this is by far the strongest position. If you took 2 losses on here, you definitely wanted to be in this one up here. But overall, there's nothing about this market that should really be beating you up to death. I see 3 possible trades, 1, 2, 3, and the third should have made up for the losses on these 2. If anything, if you trade this, it doesn't really work out. This is a break even scenario in the market right here. So, I don't know, that's
I want to, hey Wade, real quick, want to make a point. So we can see that out of that 5-minute box, we did, expand high, expand low, and now we're coming up and we're testing that original point. I would encourage you guys just to, even if you don't watch the 5-minute chart, again, all of this stuff builds exactly the same regardless of time frame. So I would encourage you guys just to stick a price line on that just expands out, and you don't have to trade off of it or anything, but just kind of watch the reaction, because we're clearly in a completely different range. That's the first box that we've gotten the expand high, expand low out of. And yeah, I would encourage you just to stick a price line right there and kind of track the expand high, expand low points out from that area. I think you'll be pretty surprised at how it all forms. Keep in mind that overall this is a short trend that the hours in, but just for the sake of watching it and how it builds, again, I think you'll be pretty surprised to see how much it reacts to that line. Even way far, 2-3 hours out from now, it'll still be reacting to that line as long as it stays in this area.
Yeah, so I mean, what Shane says, what I'm telling you right here, short here, short here, short here. That's basic strategy, right? That's where you're brand new to trading, brand new to ATS. How do I use this tool? I need something to do that gets my feet, gets your feet wet. That's what that's for. But what Shane says, finding the expand high and the expand low point and looking for the most recent master pattern playing out, that's 2.0. That's the next level of information of applying your knowledge. Now you're really analyzing the market from that perspective and understanding the expansion phase. So if you understand that, that if you get up through this, I'm telling you that just based off of you don't know anything about ATS. We're looking, this is the last expansion line. But Shane took it a step further. Now we're getting up through this level right here. If we get all the way up to this expand high point right here, and let's say you get a strong reaction off that liquidity line, that's why that liquidity line is there. That's why it's there as a sensitive point or component to ATS. You get a rotation up here. Now, you're trading off of another expand high point in a downtrend. Of course, at that point, the way this is forming, you'll probably have a green candle on the hour. So you do need to be careful with that. But again, you can see that all this framework right here, there's a very basic way to look at it, which is the basic strategy. And then there's a much deeper way that you can look at it by looking at the overall framework. And that's going to come with your experience over time of studying this methodology. And I always say, whether you use ATS or not, you don't have to be here if it doesn't make sense to you. We're not forcing anyone to use a program. But whether you use it or not, you want to, the more you look at the market that way and look for those swing high, swing low points, the contractions, the expansions, that's really, you're going to find over time that's really going to give you the most stable insight into whatever trading approach you're doing. It surpasses indicators. It surpasses everything. It's the only true leading indicator I think out there. It's the only way. If you're interested in catching the absolute turn of a market, the very high of a trend and the very low of a trend, you'll see the master pattern start playing out earlier in that trend. So if you're the type of person that's I'm not going to stop trading or trying to figure out a trading strategy until I can nail the highs and lows, you're eventually going to be looking for this. It's the only way you're going to be able to understand whether that's happening. Because if you're just looking at a moving average, by the time you cross through that moving average, this has already been done, played out, old news. And everybody saw that moving average crossover. So same thing if you're trading a moving average. Not that I don't want to get too much into that, but even if let's say you have a moving average just coming down like this, like that, most people would just say, oh, I'm under the moving average. But if you look for the expansion, swing highs, swing lows with the confirming moving average, you're already 1,000 steps ahead of anybody just looking for I'm below or above a moving average. Because now you're looking at framework within a moving average. And I don't think moving averages are the greatest. I think that they leave you way too, they can be really cool sometimes when you have the right period set, but the minute that period stops, then you're going to be changing the period settings, and then you're on the road to never-ending system development, and that'll last you about 30 years. I know, because we have some guys on here that have been trading that long, and they know exactly what that is. This is never-ending looking for the pot of gold. There isn't any. It's your mind, it's your own ability to react, and it's price action, however you want to classify it. So anyway, just my own rant right there. I know I'm getting a little long-winded, guys, and we're gonna probably end this. We're gonna wrap it up. I'll probably look for maybe one or two more questions, and then we'll wrap it up here. So let's see. There was a quick. I'm gonna look at 15 into the 4-hour on pound yen, because I think we had a request for that, and it shouldn't be too dramatically different from 5 into the hour, but let's see. Okay, so the 5, while the 5 is expanding, you can see that the 15's in a box. So, all the time frames work together, but you got to get, looking at the 5 into the 15, you don't want to get too much information overload. So just stick with what you're trading, and let the opportunities come to you. This is interesting though, because on the 4-hour, even though we've had that pretty aggressive move down, You can see why the 5-minute, let's go back to the 5-minute. You can see why this is expanding, why we had a strong reaction off this expand low point out of this box, because we're coming up to expansion level on the 4-hour. This is the danger point on the 4-hour right now. I mean, there's almost a strategy. I'm not telling you what to do, but if you're talking about a trading idea, there's almost a trading idea right now to go long and protect your position like right here, or below this low right here. Because guess what? If this rotates and goes long, you're probably going up to here on the 4-hour. So there's a possibility you're probably going to traverse this box from this expansion to this expansion, take that range up to here. I don't know if you're going to do it or not, but what I do know is your downside is pretty much right here and your upside is up here. So there's a trading idea based purely off of ATS framework. Is it in trend? Is it the basic strategy? No, you're just close to sensitive points and you're getting an expand high, expand low range. But putting the clues together here, could you not, is that not a valid idea if that's something that you want to do? Yeah, absolutely. You could buy here, protect your downside, reasonably down here. And you're basically, this is the high right here on the 5, which is right here. How far is that from where we're at now? Quite a ways. So 134.3 pips or 1,343 points. Not bad risk to reward on that, just based purely off of framework. So again, just the stuff you guys can think about. Okay, let me see if we got a few more.
And just to add into that one, so we have a very similar thing as the last pair that we were looking at on the 5-minute, where we, expand high, expand low. We're having a little bit of trouble getting up through that middle point, the origination point, coming out down the middle. So we'd really want to see it get above that if you were to get into a trade going to the long side.
Yeah.
So that could just be another management point, just, that you'd really want to see it get above that level.
Yeah. Okay, good question from Harry. Daily FX gives high and low currently. Do you guys, I think you're talking about the high of the day and the low of the day. I think what you're asking is, do we think about the high or low of the day? Those end up being significant points typically, because you're going to have, those are going to be typically a lot of times, expand low, expand high points on a lower time frame. But at the end of the day, it's the framework. The framework on the lower time frame is going to tell you, that's going to be your best indicator of the future on the higher time frames, and they work together. The stability of the higher time frame helps you to have a bias of how you are going to interpret the lower time frame, and the lower time frame is going to confirm that bias or tell you you're wrong. So that you have to just let those things work together. But as far as like highs and lows, and I'll tell you right now, I look at zero technical analysis from anybody. Personally, I used to look at everything. You name it, I did it. I don't look at, at the end of the day, after trading for over 10 years, I'll tell you that it's trend. As stupid as that may sound, it's just, you just follow the trend. And regardless if you're using ATS or whatever, if you have a way to feel confident about a trend, if you can be early to that trend, and then you have a good price action strategy to enter that market, you're right on your way to figuring out something that is going to work, or it is working for you. That the best traders in the world, guys like, you research Richard Dennis, that the original the teacher of the turtle traders. Everyone who's been trading knows that story. But Richard Dennis, when he was asked, what's your basic strategy, he literally went with the trend until he lost money. It was the directional bias that Richard Dennis really hung on to. And that's what he taught the turtles. And he basically taught them how to trade essentially expansions in trend. is we're basically doing, you know, a lot of what the turtle traders did, finding a trend that we feel is reliable, and then watching the expansion. Now it was a little more straightforward, I think, when there was less manipulation and craziness in the market. So a lot of the general breakouts would just have follow through, but ours have these multiple expansion legs, you know, stuff like this. There's expand low, expand high points. So the modification to the breakout, you know, you know, look for a contracting market or a sideways market, put an entry order above and an entry order below. That was a big strategy for a long time, and it used to work. But it doesn't work anymore because everybody started to do that. A lot of people still do that, and it does work every once in a while. But what the modification to that original strategy is waiting for the counter trend expansion and looking at the framework. The whipsaw, the proverbial whipsaw market that everyone says, oh, I got whipsawed out of the trade. That's the expansion. So the biggest death dealing move in the market is the whipsaw. It's where you buy the breakout and then it goes against you, and then you sell the breakout and then it goes against you, and then you buy it again, and then you're down and you are so demoralized by getting whipsawed. That is literally the biggest, like, what am I doing here type, you know, situation in the market. And that's ATS is about identifying the most death dealing pattern in the market and then reverse engineering from that pattern, which is the master pattern. It is the whipsaw. We're embracing the whipsaw because the whipsaw, if you understand how to identify it, is the strongest entry. That's the breakout traders that were straddling this. My buy order here, my sell order here in trend. Their buy orders got triggered going up through here. We're selling because their strategy doesn't work overall. We're selling to them, and we're embracing the whipsaw in trend. We're doing it. Not only are we doing it, we're not doing it, you know, shorting here and buying here based on the swing high, swing low. Now we're adding an extra thing in our favor. We're doing it with a directional bias. We're embracing the whipsaw pattern. You guys see what I'm talking about here? That's really what the basic strategy is all about. It's about identifying that stable trend, taking the whipsaw pattern and turning it in your favor. And you don't trade until those things line up in a way that you understand. That's how you're trading against the 95%, because they're doing everything else that probably a lot of you have done forever, is going down the mainstream route of traditional technical analysis and indicators and their settings, which have infinite amounts of combinations to try to mask what's the best thing, what's going to work for today. So you're going to the very essence with ATS, with this methodology. You're going to the very essence of why people lose money, which is essentially the biggest reason is the whipsaw pattern as they know it. We know it as the master pattern or the expansion. And you're taking that and you're turning the tables and then reinforcing it with a trend. That's it. That's the magic. That's the secret sauce. That's everything that we have here. Does it make it easy? No. Trading will never be easy. Some days you'll be on, some days you won't. But that's really the essence of what it is that you're doing here. And the minute that you get that is the minute that you'll probably start really seeing this for what it is just a tool to unmask that framework and give you those sensitive price levels. So anyway, I'm going to leave it at that, guys. I really appreciate all the questions. I apologize I'm not able to get to everything, but hopefully just through the stuff, I try to just touch on all the important things. You know, and if you're new, I would say go back through the older webinars and you know, just go through some of that stuff. The stuff that I talk about over and over again, at least in my opinion, take it or leave it, but is the stuff that I feel is the most important things to focus on. The rest is screen time and raw determination. One thing that I'll tell you right now is that if you guys can't envision yourselves, you know, being a long-term professional trader, whatever that means to you, it'll never happen. If you literally can't close your eyes and put yourself in the headspace of thinking, and basically fast forwarding your life like you're watching a movie and saying, this is how I'm going to act. This is what I'm going to do. It's almost like success visualization. If that feels corny to you or feels like, oh, why am I going to, or a waste of time, this is, it's, if you can't believe in yourself that way, then this is it's going to be really difficult. You got to start with a mental change in your own head, and work from it. And it's not easy every day. You have to work to do that. We all have our off days and our down days, and we all lose it sometimes. That's just human nature. And sometimes you got to take an extended break. You have to, just to clear your head. But you really want to think about that. You got to believe in yourself. And just knowing, like I said, whether you use ATS or not, we would like you to, but we only want people that believe in it. If it doesn't make sense, no one's keeping you here. We don't need to sell this to everybody. I only want people that believe in it and get it. And that's all I'm really interested in working with. But if you're not going to use it, just keep in mind the trend. The trend is everything. That's where your consistency comes from, is being able to correctly identify a trend and then having a safe way to enter that trend. And by far, what I've found is finding the stable trend, letting the stable trend prevent itself, and then working the whipsaw pattern in the trend direction is where you're going to find the strongest entries. They don't all work out, but they're strong. And then you can defend those positions, and you're going to deal with your pain and pleasure threshold much less often. You're not going to deal with as much pain because you're in strong positions. Guys, I'm going to leave you with that. Really appreciate you guys being on. Quick announcement. We are on schedule as of right now to release ATS 3.0 on Monday. I don't think we'll have the new ATS assistant. That still needs some more work, but you guys are on track to be getting ATS 3.0 and the expansion index on Monday, and I think it's going to go live Sunday at midnight. We're going to flip the switch. Midnight Pacific Standard Time, our time here in California. So we'll send out a for sure email, but as of right now, I'm like 95% that we are good to launch, unless something comes up last minute that we need to do further testing. But everything seems to be pretty good to go. So you guys can look forward to that. But again, before we'll send out an email, and that'll be the official announcement. So anyway, guys, I really appreciate you being on. Appreciate you guys that are sticking with the methodology. That's really what it's all about. Is you guys hanging in there. I know it's not easy. We don't promise this is any kind of get rich quick scheme. It's not. It's a hard skill set. It takes time. It takes dedication. That's trading. So we appreciate you guys that stick with it. And if you guys need any help, if you want just some extra advice with some trades that you're looking at, feel free to email us at support@tradeats.com. We're here for you. And we'll do whatever we can to clarify some things. But at the end of the day, guys, it's screen time. Put in the screen time. If you're new, give yourself 3 months. This is if you're looking for this thing to fully understand this kind of methodology in a week or 2 weeks, you're gonna be disappointed. Give it 3 months minimum to get your feet on the ground, and work with it. Build your confidence and stay in trend. That's all I could say. All right, guys, thank you very much. And we will see you guys. Hopefully we should have an exciting webinar Tuesday of next week, right after the launch. And we'll be looking at the charts with the new stuff. So anyway, guys, thank you very much. And we'll catch you guys next week. Thank you.